these sessions have been prepared for the ICAEW certificate paper level for the assurance paper. Now we'll assume that this is not the first of your studies for the certificate level for the ICAEW qualification and that you already have undertaken at least one, maybe a couple of subjects. Therefore, we won't wander you through exactly the same generic content with what your study approach should be, how much time you need to devote. Hopefully, you've already covered those generic slides in your previous sessions. Now, that advice still applies and those key steps are still applicable for the assurance paper. However, this paper will modify in its approach ever so slightly from some of the other subjects or the subject that you have started so far for the ICAEW certificate level. I'll explain along the way, but you'll see that the slides which accompany the presentation have intentionally, in some cases and instances, been left blank. Those blank spaces should be populated with information that I will provide to you. Those are key areas of the syllabus and areas which are quite important and are likely to feature in the exam. So those information pieces, we'll need you to populate those blank spaces with the information that I feed you. Now, you should also have been provided with slides that have a gap or some kind of facility that allow you to take notes. One of the things that, again, will become apparent quite soon after you've begun your studies for the assurance paper is that I tend not to simply read points to you. I prefer to expand upon the points that we've got. We've made general assumptions that you guys can all read, so I won't be reading to you folks, and this is assurance, so that would soon send you to sleep. So we will elaborate on all of the points that are being provided, in addition to giving you the information to populate those blank spaces. Now, there are a couple of confusing things about the syllabus, its content, and the chronology of the syllabus itself. So I'm not going to criticise the ICAEW, nor will I criticise the exam team. They are following the fortunes of the syllabus. But certainly for me, were I meeting this syllabus for the first time, I probably find it quite confusing. So whilst we'll follow the fortunes of the syllabus and the chapter numbers sequentially, we'll do that. We'll run from 1 all the way through and conclude at 16. When we get to the appropriate places, I'll let you know that sequentially this is not a coherent approach. It's not a chronological approach, and actually they've just jumped out of sequence a little bit. So again, not a criticism, but just something that you will need to be mindful of. It doesn't make chronological coherent sense in the manner in which they presented the information to you. However, we will follow the fortunes of the chapter numbers just to avoid any confusion, if for no other reason. The timings themselves will vary with regards to each of the recorded chapters and sessions for this online portal facility. So some will be slightly more detailed, some will actually cut some corners, maybe get you to go away, do a little bit of preliminary reading, and then meet us back and we'll catch up with the recording in a much more efficient manner than ordinarily reading through every item. But for now, we'll follow the sequence of the chapters, and within each chapter there'll be almost a sequential approach as well, so should be less confusing hopefully than the actual syllabus itself is. One of the things that you'll also see that again will differ ever so slightly, I'll explain the exam in just a second, but you'll see that the self-test questions are actually a combination of the kinds of questions that you will find in the exam, but also, just to reinforce your knowledge, they have provided us with some slightly different type questions that you'll need to complete at the end of each chapter, just again to make sure that you consolidate the knowledge and reinforce your understanding of the technical content that we've covered. My advice to you folks is do the self-test questions first at the end of each of our recordings, and then and only then, after we've completed all of the 16 sessions and chapters, then move on to the exam kit. There's sometimes a temptation just to rush through, and the way that they've formulated the exam kits means that you actually could probably start to do some questions after just a couple of recordings, but I'd advise maybe against that. There's enough questions for you to reinforce your knowledge with the summary questions at the end of each chapter in your study materials. Okay, those are the key points that we need you to appreciate before we embark on the technical content. One of the things that I alluded to when we were running through our approach is the fact that your exam may differ ever so slightly in terms of how you present your answers. So this paper is exactly the way that we've described both the timings and also the numbers of questions that you have. Yes, it's a computer-based exam. Yes, there are still 100 marks. And of course, the pass rate will still be 55%. And there will be 50 multiple choice questions for you. There will be no questions for the assurance paper where you need to populate answers into blank spaces in the same way that that will be the approach for some of your other papers, particularly for the accounting paper, which has a slightly different approach to the assurance. This is all pure, multiple, I'll avoid using the word guess, hopefully, multiple choice questions. Now, the one thing that definitely will need to be appreciated from an early stage, and most certainly before you embark upon attempting questions from the exam kit, is that the ICAEW examiners, not the examiners themselves, they're good guys, and we get to meet them from time to time, but the exams and the content of the exams are quite mean, because as opposed to multiple choice approaches that you may be familiar from your previous or past studies, where perhaps you're presented with a selection of options, maybe A, B, C, D, and you're required to choose just one option. They modify the approach for the assurance paper here, folks. So they'll often provide you with maybe 4 parts to a multiple choice question, but you'll need to address A or B, then C or D, then E or F, then G or H, and all of those 4 key parts are actually part of the one same question. Similarly, you may be beginning with 6 options for a multiple choice, and then maybe choose 3 or 4 of those 6 options which are applicable. So it won't be your traditional choose 1 of 4, or is it true and false? It will be an amalgamation of sometimes multiple options within the same single question. Now, here's where the mean bit comes in. The mean bit is easy if you have 4 parts to a question, and even if you get the first 3 parts of that question correct, if you fail or fall down on just one of those parts, then sorry, it's 0 marks. In other words, you need to get all parts of all questions absolutely correct in order to allow them to award or allocate the full 2 marks for each question. So each question, as the marking scheme for the previous bullet points suggests, is worth 2 marks, but you've got to get all parts right. It's no good just getting 2 out of 3 or 3 out of 4 parts correct. You've got to get them all right in order to max out with your 2 marks per question. Again, we'll reiterate that as we summarise and prepare you for the exam and work on the exam kit after we've completed the 16 sessions. But for now, something for you to be aware of, please. Okay, we did say we're going to start chronologically, and of course that means we'll start with the first chapter from your study text. And again, that's the name that they've assigned to your chapter. Now, what we'd like you to do from the outset is recognise that there's no assumed knowledge here. So we're going to start from pretty much a 0 base perspective, so that almost everything is explained to the nth degree, and after that we'll pick up a little bit of pace. One thing for me, if I'm sat again where you guys are, that's slightly confusing is actually they start talking about audits, and those audits are not necessarily the same thing. So you'll see, for example, those 2 extremes in this slide, the external and the internal audit references, they're not the same thing. Often they're narrowed down just to be called the audit, but they're absolutely not the same thing. I've worked in many organisations where the internal audit has been referred to incorrectly, technically, as an audit. We've got the auditors coming in. They mean the internal audit, not the statutory or external auditors. So just be careful, please, which audit it is that we're talking about. And specifically, we're going to come back and embellish in lots of detail and give you some knowledge about the internal audit when we have a look at the separate section in Chapter 9 that deals primarily with just that internal audit. So we're going to defer past the IA, the internal audit role, for now. We'll come back and we'll revisit in much more detail later on. So that leaves us with the other two key types. Now, you'll have seen already that this paper is called Assurance. It's not called Audit. The reason for that, if you haven't already started in your places of employment, then quite soon after you've embarked upon the first couple of subjects, you'll be in your offices, you'll be at your place of employment, and quite soon it will become apparent that we don't just do audits, even though we're called audit firms. So there's a whole raft of services that an assurance or audit firm can provide. We can do people's tax, we can prepare their accounts, but more importantly for this paper, we can actually provide them with different types of assurance engagements. So those numbers there, and by the way, the numbers are of no importance for the exam or syllabus, but just for ease of reference, the external or statutory audit is an assurance engagement. There are other similar types of assurance engagements. We'll call them other non-statutory audits. And the nice thing is that there is a technical backdrop to this that allows us to differentiate and distinguish between those two types. So think for now, please, just recognise that we do lots of different things, but primarily when it comes to assurance, we don't just provide a service where we undertake the statutory audit. We'll actually give other similar, but absolutely not the same audits, and you'll see in a second how they contrast with that statutory audit. Just one more point on this slide is the exam itself is based pretty much, for the most part, on the external audit. So in other words, it's based pretty much on the statutory audit. So everything, unless I mention otherwise, you can assume to hold true or be relevant to the statutory audit. Okay, again, assuming no prior knowledge, I'm just trying to make this more practical in terms of your understanding. Have a little think for a second, please, about an example of an item or something that will involve you as an individual incurring significant expenditure. So think about a big purchase. Think about maybe buying a car. Think about maybe buying the most sophisticated upcoming new phone, laptop. Even houses will be things that aren't a million miles away now that you've embarked on your accounting studies that will involve big purchases by you. Now, before we get back to the syllabus and talk practically about those big purchases, think about the amount of money that's involved. Significant expenditure means that there is significant risk to you as the purchaser. So ideally, what you'd like is a level of comfort, a degree of comfort, somebody giving you some form of guarantee that when you make that purchase, things are going to be okay. And that's a nice way for you to start thinking about the way the auditor acts when giving assurance to the recipients of those assurance services. So we will get back to the syllabus in a second, but imagine let's say your folks are going to go and buy a sophisticated phone. We know, old people like me, we know nothing about phones, we know nothing about technology. So there's a big chance that they could be ripped off, somebody might overcharge them, or they buy the wrong phone. So how nice would it be for you to accompany your folks and then give them assurance that the kind of phone that they're buying is okay, it's fine for you. They don't need the most sophisticated device. They need massive big digits because they're clumsy, they're like me, they're old people. So that kind of thing is the kind of thing we're asking you to appreciate as the general context of assurance. Think about buying a car. Wouldn't it be nice before you sign on the dotted line and hand over lots and lots of cash that you've got a pal or maybe somebody that knows a little bit more about the mechanics than you know, and therefore they provide you with assurance by having a look under the bonnet, have a look at the general condition of the car. Take that one step further for one of the biggest purchases that you'll undertake when you buy a house. How nice it is, albeit you'll probably have to pay for this service, to have somebody with a surveyor or an architect background. They know all about buildings. They know if it's a crumbling wreck. They know if it's going to withstand the test of time and it's been made with quality materials. So they can give the prospective house purchaser assurance that that big purchase is going to be able to go along without too much trouble. Okay, I think that's enough in terms of our EGs, and slightly over embellishing on the EGs that we've used here, but hopefully you can see the practical context of, now that we're going to get back to the syllabus, exactly where the statutory auditor comes in with regards to us providing assurance for our customers. And in this case, remember, unless I say otherwise, you can assume that we're now talking about the external or statutory audit. Okay. As you progress through your studies, you'll see this scenario is symptomatic. It's indicative of the kind of organisations that you will be exposed to. So even though you'll perhaps already have started your studies with even the simplest of organisations like sole traders and partnerships and really small private companies, pretty soon, certainly by next year, you'll be dealing with larger organisations, the kind of organisations that look simply like this, where the shareholders, the owners of that organisation, are not those who are charged with day-to-day directorship and management, and as we'll refer to them later, those charged with governance. So this separation between day-to-day management and the ownership of that organisation means that those shareholders have invested in an organisation that they don't run. They're not there operationally for this kind of scenario. So it's nice for them to be provided with assurance from an audit or assurance firm that actually their investment hasn't been wasted, and those charged with governance, the directors and management, aren't taking risks unnecessarily, and that they are reporting the financial positions and performance of the organisation that they own as shareholders. So we're almost like the knight in shining armour for shareholders at the side of this depiction of the separation of ownership for an organisation. So the directors and managers will provide us with accounts, we'll perform our assurance service and our audit, and then we'll give our opinions to the shareholders that say whether we agree with how those accounts look and how they've been presented. So that's us, much closer to the syllabus, and that's typically a nice thing for you to go back in. Just if you start to lose the thread, or what are we doing again here, just go back. Remember, we are, aside from this relationship, we get information from the individuals at the bottom of that slide, we review it, we perform our audit services, and then we report to the owners of that organisation at the top of this slide. Now, the backdrop to this I mentioned is quite theoretical, so bear with us on this. I'm going to go through and we're going to populate some blank spaces. So this is where you get to start inserting information into either those blank spaces, if you can fit it in, or maybe even alongside the slide. So a little bit of work for you guys, but remember, this is audit and assurance, so be careful please. You will drop off quite easily unless we get you engaged and get you doing a little bit of work. So this is the audit type services under the assurance subject, and here we're going to go through the theoretical aspects of all assurance services. Now, once we've gone through those 5 key elements, I'm going to walk you through exactly the same things again, but this time we're going to differentiate between the statutory audit, assurance engagement, and other similar but non-statutory assurance engagements. So hold on to your hats, we'll do it quickly, and then we'll slow it down and go through and contrast the same key elements 5 times, but with 2 types of assurance engagements in mind. Right, here we go. First of all, the top of this slide, the bullet point before the 5 key elements. Yeah, insurance engagements, regardless of whether they're statutory or non-statutory, they involve evaluation by, and this is where you'll populate that blank space, please, with the words evaluation by the assurance firm. In other words, by us, the auditors. So it involves evaluation by the audit firm, the firm, if you like, to abbreviate, of work carried out by another party. So in this case, the audit firm will evaluate work which is being carried out by the directors or the managers. In other words, the financial statements and how they've been prepared. Now, again, you can populate the blank spaces. It will save a little bit of work as we go through. And when we go through, you can focus just on the key content and our contrasts. But now I'm going to walk you through quite quickly the key elements that underpin all assurance engagements, regardless of their type. Right, so we're going to do lots and lots of different types of engagements. They fall under the umbrella category of assurance. They start off with 5 key elements. The first of which, and again, this is you populating that first blank space under the key elements heading, please. The words you need in there, please, is a tripartite arrangement or agreement. Tripartite arrangement or agreement. Tripartite, T-R-I-P-A-R-T-I-T-E, or even just 3 parties. So a 3-party or tripartite arrangement or agreement. Second element, you need a subject matter. Again, we're going to go through each of these again with specific EGs for the different types of assurance engagements. But for now, element 2 is a subject matter. Element 3, you need suitable criteria to evaluate the subject matter. So the third bullet point underneath the key elements heading should now be populated with the words suitable criteria to evaluate the subject matter. In the exam, they sometimes abbreviate that down to just criteria, which is fine, it's okay. Lastly, we are going to talk about evidence throughout the assurance paper, but the fourth element, for now, it's evidence to support the conclusion. And you'll see when we progress through our studies, we'll actually describe evidence in a particular manner. We'll talk about it in terms of its sufficiency and its appropriateness. For now, it's just evidence to support the conclusion. And then, of course, chronologically, we'll end up with a level of a conclusion, a level of assurance. And for you and I, that often just means the report. So the conclusion, it's often the report that we'll issue as assurance providers. Okay, now that we have the 5 key elements, technically, and by the way, just in case you're wondering how the questions manifest themselves in the exams, typically what they'll do is they'll set out maybe 4 items in a selection from your multiple choice question, and maybe 2 or 3 of those items will include some of those key elements, and your job will be to pick out the appropriate ones. So you might be given maybe 4 items from which you are allowed or required to select some of these key elements. It won't always be all 5 being examined in the same question. Okay, this is what the tripartite agreement or arrangement look like. Remember, tripartite simply means 3 parties. So let's do this twice, please. Let's focus on where the exam focuses, which is the statutory or external audit. Under the first element of an assurance engagement, where that assurance engagement is the statutory or external audit, party 1 is us. That's the firm. We're the party that provide assurance. So you can make a note for yourselves, please. Party 1, that's the firm. In other words, that's the audit firm. We are the party that provides assurance. One of the other ways, by the way, that both the study text and also the exam from time to time refers to the audit firm or the assurance provider, you'll often see that described as the practitioner. So that's okay. You can actually see the practitioner used to describe the firm or the assurance firm as well. Party 2, that will be the party who have prepared the reports that require assurance. A nice way for you to summarise that sentence is that will be what we call the responsible party. The responsible party. So in other words, that's the party responsible for preparing, in this case, the statutory accounts that we're about to audit. Party 3, that's the party to whom, I'm not sure why it's an owl, the party to whom, if I say that quite quickly, it might sound to who, maybe, yeah, trying to hoot, I don't know. I'm not sure. Okay, party 3, the party to whom, try that, looks like an owl. The party to whom we provide assurance. Now remember, from that diagrammatical representation of an organisation, where we've seen separation between ownership and day-to-day management. Party one, that was us, the good guys, aside from that flowchart, that diagram. Party two, those are the guys at the bottom, the directors and the managers. Party three, the party to whom assurance is provided. They're going to be the users of the accounts in our assurance report. That would be the shareholders. They would be the owners. Now let's take this again and do it with a slightly different type of assurance engagement. If you were in a scenario where you've been asked to provide assurance over a business plan because you've got an organisation who is your client who is actually applying for some kind of license to act as an insurance company maybe, or a bank, where they need a business plan to be approved by the local regulator. Now, if we take that scenario, we're still the same party. We're party one, we're the audit firm or the practitioner, and we will be providing assurance. Now, the thing that's changed now, it's party two and what they've prepared. Party two will still be directors and management of this new proposed business, whether it be bank or insurance business, but they've given us a business plan. They haven't provided us with historic financial statements to audit. This is a business plan, so we're going to have a look at that business plan, and we'll be reporting to party three. Party three, remember, that will be the party to whom we provide assurance. That's the intended user of both this business plan and our conclusion, our report on that business plan. Now, where that's the case, party three will be the regulator in the jurisdiction where the insurance company or bank, whichever example we were going to use, has applied for a license. In other words, wants to operate. So this time, party three, not the same as it was under the statutory. They're not shareholders, they're not the owners. It's a regulatory party, and they're going to ask us to give them assurance, please, over the validity of this entity's business plan and whether it looks plausible. So that's where you'll see slight separation between the different types of assurance engagements. The first statutory, the second non-statutory. The Companies Act doesn't dictate the need for assurance over business plans. However, you can see the usefulness, in particular for party three, of having us, the audit firm or practitioner, give them assurance over what party two has prepared in terms of their business plan. Right, we continue on the same contrast. We'll pick up speed a little bit along the way with each of the remaining four key elements of the assurance services. So here, subject matter. Let's do it twice, please. Under the statutory audit, the subject matter, that's simply the accounts. And by now, of course, you know that by accounts we mean the statement of profit or loss and the statement of financial position, and maybe even the statement of cash flows. If it's another type of assurance engagement, and it might be quite nice if we carry a thematic approach all the way through. In other words, let's assume that the assurance service is the same one that we've considered with the previous slide. In other words, it's a business plan to support an application to open an operation as a bank or an insurance company. In that case, the subject matter will be the business plan itself. Moving forward, now that we've got the first couple of key elements, regardless of the type of assurance engagements, we know they're the same elements. The only thing that changes the underlying information and detail within each element. This time, element three. If it's the statutory audit as the assurance service that we're providing, in other words, we're reporting to shareholders on whether the accounts look okay, then the suitable criteria we'll need, and by the way, good news, because you already know it from your study so far under the accounting paper, it's IAS, it's IFRS, it's the accounting gap that are being used to prepare the accounts. If it's, by contrast, a different type of assurance service, the type that we've already mentioned in passing, where there's been an application to operate through the regulator as a bank or insurance company, then the suitable criteria won't just be accounting standards, it will be things like the assumptions upon which the business plan has been based, and whether those assumptions are valid, whether they are plausible, whether they are reasonable assumptions upon which the future forecast financial projections have been made. Fourth element, evidence, we've said so far, and as a precursor to what's coming later on, sufficient appropriate evidence will be usually how we describe evidence from here on in. For now, we need evidence to support our conclusions. Now, this is done, element 4, in tight conjunction with element 5. So I think it's quite nice if you can not separate 4 and 5 when you're going through these things again, please, but try to think about evidence supports your conclusion, therefore 4 and 5 are directly correlated. In other words, the higher the level of assurance in our conclusion or report, the more evidence that we're going to need. In other words, if the party that we're providing assurance to wants more assurance, they want more of a guarantee, please. If that's the case, folks, then we'll need to gather more and more evidence. In other words, we'll have to do a lot more work. Okay, we're going to walk you through the practicalities of what work looks like in terms of how much work we perform, but for now, we need enough evidence to support the conclusion and level of assurance we're providing to that party that we're giving assurance to. Now here, evidence for the statutory audit, it's a lot. It's what we call sufficient appropriate evidence. It's lots of detailed work. If you haven't already been involved operationally at your new place of employment, then you guys are going to see, particularly when it comes to critical year ends, for 31st of December, for example, to common one in the jurisdiction where I'm based, and therefore you'll see that we're really, really busy during the couple of months that follow that. So the months of January, February, yeah, we don't have lives as auditors. We're just busy gathering evidence for the statutory audits for those 31st of December year ends. Now, contrasting that and again distinguishing between the evidence that we need to support the conclusion when it's another type of assurance engagement, like giving assurance to a regulatory body over the business plans of a bank or insurance company, not so much work. Much less work. The level of detail drops significantly because it's all just about plausibility and do the figures look reasonable? Are they okay? That regulator won't be looking for the same level of assurance as the shareholders and the owners of the company when we perform the statutory or external audit. Lastly, conclusion. Now we've embellished on each of the points so far, but we need to do so in even greater detail when we get to the conclusion, fifth element of assurance engagements. Now, you know this is going to be some kind of report typically to the party that we're providing assurance. So back to where we were with, let's contrast please those two types of assurance engagements. When we're giving a level of assurance and a conclusion, and it's the external or statutory audit, what we call that a reasonable assurance engagement. So the type of engagement there is a reasonable assurance engagement. Now just hold on to the statutory audit, please, thematically, and move down a bullet point to the level bullet point. Now, where we're doing a reasonable assurance engagement like the statutory or external audit, then the level of assurance we provide, in other words, when we're talking to the shareholders, the owners, we're giving them a high level of assurance. In other words, we've got our arms around them metaphorically saying, look, you can rely on these figures. We're giving you a high level of assurance that these figures look okay. And you'll see that that high level of assurance that results in reasonable assurance engagements, like the statutory audit, is reflected positively in the wording that we use right at the start of our conclusion or audit report. We'll say, and you'll almost find yourself metaphorically nodding along with the statement. So you'll find yourself saying, yeah. In our opinion, the financial statements that we have performed our statutory audit on, Yep, they're true and fair. Now, clearly, I'm embellishing. I'm using the words yes and nodding along here, but it's a nice positive affirmation. When you look and contrast that with what we're about to do for the other type of assurance engagement, you'll see there's nowhere near the same level of positivity in terms of the message that we're trying to convey there, because the level of assurance is not the same. Right, let's go back again, please, to the fifth element, this time for the other type of assurance engagement, not the statutory external one. This time we're back to giving assurance to a regulatory body that the business plan looks okay. That type of engagement is called a limited engagement type. The level of assurance we give, it's moderate. Now, you can contrast straight away between moderate being less than high, but also note the two of them. None of them constitute a guarantee. I think it's pretty practical for you to assume that lots of organisations, businesses, lots of users, the intended users of assurance assignments, would actually like guarantees. So you'll see there's a real reason why we use the words high and moderate here, and we don't often guarantees. So just hold on. If that's what you're thinking, then that's good that you're thinking along those lines, but hold fire, please. I'm going to walk you through the reasons why we can only ever go as, in terms of the levels of assurance, as high as high, and when we don't do the same kind of engagement, like the statutory engagement, the external audit, then we can only go as high as moderate. Right, the last piece of contrast, where we contrasted and distinguished between the wordings used, yeah, the negative actually sounds much worse than it really is. Be really careful here, bloke. It's almost like a double negative is the way the wording has been given at the conclusion stage of the assurance engagement, where that assurance engagement is a non-statutory assurance engagement, the type of which we've considered so far. What we say is, if we carry on that theme, by the way, so digressing ever so slightly away from the actual phrase that they use in your study text, if we use my EG, what we'd say is, in the opinion or conclusion section, following our review of the business plan, nothing has come to the practitioner, the audit firm's attention to suggest that the business plan, the details that we reviewed, were not fairly presented in all material respects. And straight away, there's two negative type connotations, nothing and not, but you'll know from your previous studies that where you've got two negatives, actually, they turn into a positive. So it's a form of positive, but the wording that we use under that second category of assurance engagement is nowhere near as positive. It's not, in our opinion, absolutely, yeah, things look fine. It's, well, based on what we didn't find anything untoward, is really the message we're trying to convey. Just before we move on, we try, whenever possible, to give you little hints along the way for exams and exam technique. I think if I were you, the best thing that you can take away from the slides that we've just gone through with the key elements is both the elements themselves you'll need to be familiar with, but what they'll often do is with the conclusion type questions, they'll try to mix and match. So they'll say, for example, under a statutory or external audit, how would the conclusion be presented? And there, they'll give you a mix, if you like. Will it be reasonable with moderate and negative? Will it be limited with high positive? So they'll mix and match. So clearly you're looking for, if it's the statutory external audit, you're looking for the combination between type, level and wording to be reasonable, high, positive. So that, if I were you, I'd start to try and rote learn, if you like. Statutory audit work is always reasonable, high, positive in terms of those three parts of the conclusion. Yeah, one of the things that they ask you to do, because you'll see already that there's more than one type of assurance engagement, but the one that we'll focus on, the one that the exam is focused on primarily, is actually that external, that statutory audit. So is a statutory audit always required? Well, actually, yes, it is. And then you're going to find quite quickly, quite soon thereafter, that there are caveats. And those caveats say, well, maybe, yeah, you don't always have to have a statutory audit. But start off with the premise, please, that statutory audits are always going to be necessary because the law says so. And then work through the fact that we've already appreciated, if you're the owner of an organisation, you as the investor, as the shareholder, yeah, of course it's going to be necessary in their eyes because they will see benefit. They'll see value if they have separation of ownership and day-to-day control. They want assurance that what the directors and managers are doing is consistent with their investor wishes. So shareholders definitely will see the benefit in an external or statutory audit. Now, there are different types of organisations that underpin almost all of your studies, even at the certificate level. So you should start to become familiar with listed organisations. In other words, those that offer shares which are listed on a recognised stock exchange, like the London Stock Exchange. So think about your really big businesses like Barclays Bank, Tesco's Supermarket, GKN Engineering, all those really big businesses under different industries. They always have to have them because they are listed. Now, there are other EGs, two which we actually mentioned already from our notional example when we walked through the 5 elements. So think about insurance businesses, think about banks, think about businesses that offer corporate service provision services in a jurisdiction which is regulated. Those types of organisations, regardless of whether the shareholders want them or not, regardless of their size, they always have to have them. So yes, for them, an external or statutory audit will always be required. Now, for you to avail yourself of the potential exemptions away from the statutory requirement from an audit, as long as the shareholders are okay with the business not having an audit, as long as you're not either listed or one of those other types of regulated or overseen formally businesses, then you can potentially avail yourself of an exemption, and it's based on size. So the potential exemptions, they're known as the AKA, also known as the small company exemption limits. So if you fall below certain parameters or criteria, then it's okay for you not to have a statutory or external audit. Right, let's have a look please at the numbers and the values that you need to fit in, and then we'll talk about the meatloaf rule. So remember what we're about to do, folks. We're starting off with the premises, all businesses have to have a statutory audit. Now we're about to walk you through as long as you're not listed, as long as you're not regulated, as long as you're not one with the shareholders insist that you have one, then you can actually avail yourself of an exemption away from the statutory or external audit. And it's based on these criteria. If you have less than 50 employees, if you have turnover of a value which is less than 10.2 million, if you have total assets, be careful, that's total, that's gross, not net. If you have total or gross assets less than, this value is quite nice, it's half the value of the turnover figure, so it's 5.1 million. Now, where you satisfy those criteria, the less thans, then potentially you can avail yourself of an exemption from the statutory requirement for an audit. Why they haven't just used 10 million and 5 million, God only knows. I'm not sure really, folks. Somebody clearly gets paid way too much for doing these kind of things. So our job not really to question this. And by the way, I think there will be scope along the syllabus certainly for assurance, for you to actually start challenging lots of these things and the validity of this will be one where I'm sat there thinking, if I'm you, why not 10 and 5? Isn't that much easier? I'm sure there's a really important reason. They just don't examine it in this syllabus. Okay, right. Now, the meatloaf rule, by the way, yes, you don't have to satisfy all 3 criteria. You don't have to fall below all of those 3 levels of 50, 10.2 and 5.1 respectively. The meatloaf rule, yeah, you only need to satisfy 2 out of 3. So 2 out of 3 ain't bad. And if you know that song, you are much older than most of the students we have at this stage of your studies. Right, okay, old music analogies aside, folks. Yeah, 2 of those 3 are fine. If you satisfy any 2 of those 3, then that business can avail itself of the exemption away from the need for the statutory external audit, as long as it's not one of those aforementioned types of businesses. Now, there are pros and cons along the way. I have done something slightly different to the way that your examination syllabus does, but just for ease of reference, just to help you guys remember things slightly more easier than the study text suggests. So the main advantages and disadvantages, the pros and the cons, if you like, we've already done some of these. So shareholders satisfied that their investment's doing okay, that's fine. Disputes settle more readily. So the kind of thing where maybe there is a takeover bid and the value for the takeover bid can't be readily agreed, by having an assurance or an audit over the figures, then maybe that might help settle a dispute over the value of a business. You'll see, not now, but certainly when we walk you through what an audit looks like in much more detail in later sessions, you'll see that actually the way we go about our work, it lends itself to our ability to potentially highlight in areas where there can be increased efficiencies or effectiveness of that business's processes. Even the smallest businesses, so where you satisfy criteria that allows you to avail yourself of the exemptions from the statutory or external audits, even those types of small organisations might often need bank loans. And particularly what's going on macroeconomically at the moment, there may be even greater cause for credit facilities and bank loans. So I think you'll reasonably expect the provider of that finance, a bank or a building society, to look for some kind of assurance or look for some kind of audit over those figures. Yeah, major change. Again, if you're switching over your investors, new investors coming in, old investors going out, then those kind of things are normally easier to do. Investment will change hands much quicker if the figures aren't disputed. Now, those are the general advantages. Some of the cons, if you like, the disadvantages. The F, you can use the blank space, please, now, and start filling in some of this information. F is financial, and then followed by that statement, please. Financial statements include estimates, is how that first full line should read under just the F heading beneath the disadvantages underlined title. Financial statements contain estimates. Now, you already know that. If you've done the accounting paper, you guys know all about accruals, you know about provisions, you know about depreciation. So you already know that some figures aren't an absolute science. Therefore, the disadvantage of auditing those things are, even with the best will in the world, those figures might not be correct just by virtue of the fact that often they need to be estimated. So that's a disadvantage. We can't be absolute in making sure the figures are okay because some of those figures are based on a little bit less than a scientific approach. Now here the I, it stands for internal controls. So fill your blank space with the words internal controls, please, where the I is, and then alongside you'll need to expand that point. Yes, internal controls, they don't always work. So it's great having internal controls, some of which, by the way, you may already have been exposed to, like bank reconciliations as a form of financial reporting control. It doesn't mean that the bank reconciliation is always going to be performed correctly. Therefore, internal control deficiencies or problems could impede the audit. The R stands for representations. Now, they've talked in the study text about this, that they'll suggest information from third parties for us so that we can use the fired mnemonic. Representations from management may be sought. So representations from management or third parties may be sought. In other words, sometimes we just have to rely on what other people give us or the orations which are provided to us. So explanations, representations from management need to be relied on. They might not always be. If you've got a less than scrupulous manager or third party, then it just means those representations are less than reliable. Now the E, yeah, just a little bit of a poetic justice with the E on this one, please. The exercise is a subjective one, and the E and the D actually, they go almost hand in hand. So the exercise is a subjective one. In other words, the auditor uses their own judgments in determining what to test from the figures presented to them. So the exercise is a subjective one. In other words, the auditor needs to use an element of judgment. Now that brings us quite tidily onto the D in your mnemonic, but also back to do you remember the 5 elements from earlier on? And the conclusion, the 5th element. When we describe that, we used one of 2 descriptions, whether it be the statutory audit or another type of assurance engagement. We only use the words high for a reasonable assurance engagement or moderate for a limited assurance engagement. And here's the reason why we could never go any higher than high in terms of the level of assurance. It's because of the D. We don't test everything. We don't test everything. So the practitioner, the audit firm, doesn't test everything. That subjective exercise based on the auditor's judgment, yeah, it's not always practical for us to be able to audit every figure, every time, every year. There's just too much. Imagine the largest organisations, it sometimes takes them almost a year to get their accounts ready. Often we'll only have a matter of days or weeks to audit the figures presented to us. So it's not practical, it's not possible often. And even if we did test everything, there'd still be an element of human error. Yes, believe it or not, auditors are humans. So for that reason, remember, subjective exercise, and we don't test everything. That brings us nicely back to the fact that we couldn't possibly ever guarantee a level of assurance higher than high. I have given you, in my humble opinion, a slightly better diagram than the one which has been provided. They do it almost like a mini flowchart. If you look at the bottom of your slide here, we've given you a page number, which hopefully still, if you're reading this in a couple of years' time, then hopefully the page won't have changed dramatically. But they give you almost a flowchart. It looked like there's 5 key stages within that stages of an audit description on page 12 of your study text. It's fine, but I think if I were you, I'd have a look at the appended report, that appended sheet that I've given to you. It actually misses off one of the stages that they've got in your study text, the obtaining the engagement. So my version of it starts with planning the audit, and my version of it actually has 8 boxes rather than the 5 that you've got here, albeit that mine starts at the planning stage, so 1 box lower compared to the study text. Yeah, that's what it looks like. I promise you at the outset, folks, this is not me just doing a reading test to you. The only thing that I would ask you to do is have a look at each of these key elements. Clearly, we start at the top with planning, and then we're going to finish with the conclusion, the audit report, at the bottom of my appended diagram or sheet. Now, that flowcharted depiction, my version, not your study text, it's a diagrammatical representation of the audit process. It's dynamite stuff for you guys that have little or no experience in the audit world, because that for you now diagrammatically allows you to see what's involved. Now, just to take that one step further, specifically where you guys are going to get involved, year 1 employees, you can have a look at the boxes which are adjacent to each other about 2/3 of the way down the page. And you'll see the boxes which talk about the evidence gathering in terms of reduced or extensive testing of transactions and balances, what we call substantive procedures. So the 2 adjacent boxes that's where you'll be involved heavily during those months after the financial year ends. That's pretty much the work that you do. You'll often call those boxes field work. The only difference is the extent to which we carry out field work and the extent to which we do our testing, whether it be reduced or whether it be a comprehensive, extensive substantive testing approach. Right, for now, we're just asking you to have a look at the diagram and recognise it's chronological. It moves from top to bottom. We only have 2 ways that we can go. We either go down what looks like an easier route, reduce, or we may need to extend the work that we do down the right-hand side of that diagram. Now, either way, the entire process, it's driven by a new concept for you guys. International Standards on Auditing, that's the framework. That forms the framework of how we perform our role as auditors when performing the statutory audit. So International Standard on Audit, for you and I, that's our Bible now of how we perform the audit process when the audit process is the statutory audit. Much more. Keep that diagram to hand, I think, as we go through, and I'll make passing reference to it just so that you know exactly where we are chronologically and therefore the things that we importantly need to focus on. A couple of points to finish off on for this chapter to introduce you to the concept of assurance is that the fifth element, remember, the audit report, that's where we're headed. Really meanly, they leave you in a situation for this syllabus where you're assumed that it's a really simple outcome and they don't complicate things to give you a really full understanding of what we're doing when reporting. So mean in a way, but in a way also quite fair because they're not overburdening you with lots of different complex outcomes and scenarios that impact the audit reports. We'll do that when we do the next level up for the A&A paper. There is a blank space that you'll know here, a report in which the auditor states that the financial statements, the FS, present a T and F, true and fair view. It's known as a, you can populate the blank space. For now, just these words and these words alone, please. It's an unmodified report, an unmodified report. And we will come back. I'll give you both an overview and we'll conclude with the audit report in much greater detail later on. Now that T&F abbreviation, truth and fair, it's a key concept as your study text correctly described. It's what we are giving assurance on when we give our opinion or conclusion through the statutory audit. So in other words, you remember the diagram where we had the shareholders at the top, the directors, managers at the bottom, the company in the middle, and we said we're almost the good guys alongside that diagram or slide. Yeah, when we get the accounts from the directors and managers and we apply our audit techniques to those accounts and figures, then when we give our conclusion, element 5 of the assurance engagement, to the shareholders, then we're giving them assurance that those accounts are true and fair. Now, the concept of truth and fairness, again, quite meanly, is not given to you in your study text. They do try to define the words true and fair. However, truth and fairness goes beyond just those two key words that they provided to you. So there is no definitive for truth and fairness. However, what we're really saying to the shareholders when we finish the statutory audit and we give our conclusion through the audit report using positive wording, high level of assurance, we say to show a true and fair view, the accounts are being prepared in accordance with two bank spaces. First one, applicable GAAP. Remember, that's two A's, not the shop. So in accordance with applicable accounting standards and conventions. The second, in accordance with applicable legislation and regulations. So in other words, in accordance with the applicable laws. And then the other two bullet points, there should be comparability. You guys already know from your accounting studies. So there should be consistency within those figures and that they have been presented in a manner that reflects the commercial substance. In other words, they're not misleading in any way. Right, that's what we look for to define truth and fairness in lieu of a definitive one-liner definition. And that brings us to the conclusion of our first chapter for this online portal facility for the ICAEW's assurance exam. Quick summary that allows you to round up the knowledge that we've just provided for you in chapter 1. And hopefully now you know that, yeah, we do more than just audits. We do lots of different services. For this paper, though, we know that we do different types of assurance work. And it's quite nice because we went through the 5 elements and those 5 different elements that underpin all assurance engagements, whether they are statutory audits or other types, the types of which we talked about, where of course being those where we give assurance to a regulatory body for a proposed new business, which is a regulated business like a bank or an insurance business. So the level of assurance, yes, clearly they'll differ because we will be giving different type of assurance engagements to perform. And as you'll see along the way, the work itself will be diluted because the evidence that we need will be greater for statutory audits than it is for the non-statutory audits. We've seen the pros and cons. Have a look again at them. Try and use the 5 mnemonic, even though my details are slightly inconsistent with the study text to allow us to use the 5 mnemonic. You'll see that actually, once you rejig those words, they actually are the same cons that they use in your study text. We've seen also that some businesses have to have them, regardless of whether you think it's a good idea or not. And for some, it might actually be desirable, regardless of whether it's a good idea or not. Strangely, one of the cons that wasn't on the list that you could reasonably assume is a disadvantage, it's the cost. So don't go down that route in the exam, please. Cost is not an examinable point in terms of a disadvantage. But yeah, I get it. I understand that there is a cost disadvantage to it. And again, a recognition that the syllabus for this paper, it's based largely on the external or statutory audit. Right, hopefully you now know enough to allow us to embark in slightly more detail for the remaining chapters. Have a look at the diagram, please. You now know what the audit looks like diagrammatically, and you know that we work from top to bottom, so that you know we start by planning after we've engaged with our clients, and you know that we're going to finish with the fifth element, that's the conclusion, and for us that means the audit report.